Okay guys, this information is taken from Century 21 Accounting. So, this is lesson 8.2, my favorite chapter of them all, I think. So we have the post-closing trial balance. What we've done so far is put information into a general ledger account, and we found the the closing entries. So here is just a brief preview of what they've given you from the previous chapter built on. So this is all the general ledger accounts after closing entries are posted. So you could see all of these open. Some of these are closed. How can you tell? By the line. The line. Could tell by the line. It's closed. Zoomed in. There you go. Line, line, line. You can follow that in your book. So you have these accounts that are closed. Why? We closed them. So again, closing, closed. We need to prepare a post-closing trial balance. From the information that we just had, accounting just builds and builds and builds on top of each other. So, let me pull this over. We prepare a post-closing trial balance, a trial balance prepared after the closing entries are posted. Let me show you something really quickly. When we did the worksheet, it says here, trial balance up top here. This was the name of one of the things. Trial balance, adjustments, income statement, balance sheet, trial balance. So now we need to prepare a post-closing, post means after, post-closing trial balance. So, flip through here. First thing we do is label it again, who, what, when. Then we go through all of our general ledger accounts and only put in the amounts that are not closed, that do not have the line. That's why it's important to draw the line. And it's important to draw the line so that someone looking at your books can say, hey, this individual didn't mess up or anything. This account is actually closed out for the fiscal period. Because if you don't, you use the same books over and over again. So in the general ledger accounts, these actual papers, if you don't close them out, somebody will look back at this information that you did, and it will show that you just continue to accumulate sales and revenue. You don't want that. So you want to make sure the debits equal the credits. And my favorite diagram in this entire book is the accounting cycle. Once you finish 8.2, you have completed the accounting cycle for a service business. First thing we did was analyze transactions. That was back in the first things that we did, like bought supplies on account. Then we journalized those transactions. Then we posted those transactions to the general ledger. Then we prepared a worksheet. Then we journalized and posted those adjusting entries, that supplies on hand and that insurance. From those, we prepared financial statements. You probably hated this. Then we journalize and post the closing entries. We did that in 8.1. Now we prepare a post-closing trial balance. Study this diagram. Look at it. Review it. Important. This is the accounting cycle. This will help you make sense of everything, why we do it. There is a cycle to it. Once we are back at square one, or finish 8, we're back at square one, and we do the whole cycle all over again. It's repeated. This is accounting. This is what accountants do. Those that do bookkeeping and stuff, that's what they do. So let's do 8.2. It says, prepare a post-closing trial balance. Use the general ledger accounts from work together 8.1. Your instructor will guide you through, etc. Prepare a post-closing trial balance for Fix It Now on April 30th of the current year. So I'm going to get out my worksheet. Close that. Who? Fix it now. What? When? April 30th, let's just say 2022. Okay? So we go through the general ledger pages, let me find them here. Starting on page number 161, I think. Yep, 161. We go through and we post, or it's not posting anymore, but we record the accounts that are still available. So we start with cash, and that's the first thing I'm gonna do. Let's see if you could see, zoom in. Perfect. Okay, cash. What's the balance? 4,900, debit. Copy. Good, let's go to the next one. Petty cash. Okay, what's the balance? 75. Good. Accounts receivable. I would be specific, yes. B, Whittle. What's the balance? 1,387. Okay. Supplies. The balance is 75. Debit. Again, I'm just pulling them from right here. Bottom one, balance. This one is prepaid insurance. Can't fit everything on one screen. Prepaid insurance. Balance 2,000, or my bad, 250. Good. Okay, let's look through. Next page. Accounts payable. Credit, 267. So accounts payable. I would be specific here as well. South side supplies. Balance is 267. Then we have Connor Whitney Capital. Oops, you can't see that. Connor Whitney Capital. So we have a running balance here. Running balance. We started with this number, then we got a credit of 677. So we added it, because if they're both credits, we get to add. Then we had a running balance of 8,120. Then we got a debit, so we had to subtract. So then we got a running balance of 600, or 6,420. So we come down here, Connor. I'm just using the name there, Connor Whitney. Capital. And our balance is 6,420. And now let's keep going. So income summary, closed out. Sales, closed out. Advertising expense, closed out. Cash short and over, closed out. Insurance expense, closed out. Miscellaneous expense, closed out. Supplies expense, closed out. Utilities expense, closed out. In the real world, if this was not done on a computer, it would be separate pages of these. Miscellaneous expense would be at the top of the page, and then you could flip to the next page where you would have a supplies expense. On the computer, it's different tabs. So you click on miscellaneous expense, you clicked on supplies expense, just different tabs like on your computer. And I think that that is it. So what does that mean? We finished. We're done this. Always total and roll. The point of the post-closing trial balance is to make sure the debits equal the credits, and you have a new account of your information. So when I add these, when I add 1, 2, 3, 4, 5, when I add these 5 rows together, I'm getting 6,687. When I add these two together, I'm getting 6,687. Do they equal? Yes, double rule it so I know that it equals. There you have it. You prepared a post-closing trial balance. Now you can look at your information, see your updated accounts, and not have to flip through your general ledger to try to find this information. You have it all written out for you. Okay, good luck.